Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. At present, the Australian dollar still remains somewhat to a heavy bias, that is negative, due to the heavy casualties it took yesterday after crushing the 60-day moving average at around 66.60 and now plummets towards 66 cents with the objective of 65.40. We are seeing somewhat oversold technicals, but I still feel from the point of where we're sitting, there is still at least 60 points or at least around that region that I'm calling around 65.40 for the contest, and maybe see a positive response from that level. And well, we have come quite a bit of a distance now from the top side of this range of 69 cents. So profit taking is most probably about to be seen. Looking at the euro, the market is somewhat softer as it now looks towards that key level of 108.80 as the dollar index, which measures the greenback strength against a basket of six major currencies, covers further ground to 102.60. Overnight, US Federal Reserve Chairman Jerome Powell and many other central bankers took at the European Central Bank's ECB Forum on Central Banking for 2023 in Portugal. There, Fed Powell reminded his audience that in their latest set of economic projections still remains somewhat strong to the majority of the fact that the Federal Reserve officials at least forecast 225 base point rate hikes for 2023. Powell also said that he would not take the possibility of moving on rates at a conservative meeting that is off the table at all. And the fact is that he implied that two more interest rate hikes was on the cards for this year. Along with that, ECB President Christine Lagarde also said voted for higher interest rates after stating that they still have ground to cover, and also added, if the baseline stands, we know we will probably likely hike again in July. Still to come, we've got the US GDP and also the Fed's preferred inflation gauge, which is the Personal Consumption Expenditure Price Index for May. If we do see a stronger PCE, then that would definitely, I feel, lock in, or at least give much talk about for the rate hike in July. But looking at this current pattern, we could say that there is a possible diamond formation forming, which is bearish, and therefore if the pattern does proceed into a downward fall, then a break of 108.80 would give the next target seen roughly around the region of 107.70 and reassess from there. But given the fact that this pattern is negative and also the RSI is breaking down and the MACD is following suit, then I feel there is at least a bearish challenge towards that 108.80 and then down to 107.70. The call to 145 for dollar yen is nearly there as the market presses on and now posts a fresh intraday high around 144.5. With 145 on the targets, I do need to reassess because the market is getting somewhat overbought, bit of divergence, and the ADX is overheating. So I do feel that since the rally that started off around 139 and now close to six big figures, that we could see some profit taking coming back into play. Sterling was weaker overnight, and surprisingly, after the market crushes the level of 126.65 and now looks further to the downside, which could come in around 124 figure 50 due to the heavy technicals. Now with the top side negated at 130 and also with a break at 126.65, the bearishness is likely to continue. Spot gold is weaker as it looks now towards the region of 1,850 after taking out the level of 1,910.12. The technicals are bearish and the ADX is supporting a negative trend. So therefore I feel little upside, and as this pattern strengthens, no doubt by the end of the week, we should find the broader call has also been confirmed as well by the ADX. Looking at the oil, very whipsaw price action in the last 4 days, been rather directionless. However, the bounce last night has put a little bit more upstep in the pattern today. Therefore, we could look up towards 70.5 as a target. But I still feel the broader range of $65 to the top side of 74 is going to play out, no doubt, in the next few weeks. So therefore, the market is most probably going to keep in this sideways broad pattern until we get a stronger direction or a break, that is of 74 or 65. Well, that's a wrap for today. Thank you very much for joining me. And as always, look out for the intraday report and I hope you enjoy the rest of the week.